Understanding further the concept, let us try to answer a few set of Q&A pairs for facts about futures and options in the stock market. Facts about futures. What are futures contracts? Futures contracts are agreements to buy or sell assets, like stocks, commodities, or currencies, at a predetermined price on a future date. They are widely used in India for trading stock indices, commodities, and more. Where are futures traded? Futures contracts in India are actively traded on major exchanges like MCX, Multi-Commodity Exchange, and NCDEX, National Commodity and Derivatives Exchange. How do stock index futures work? Stock index futures, like Nifty futures, let you speculate on the direction of the stock market as a whole without buying individual stocks. They are among the most popular futures in India. What makes futures liquid? Futures contracts are highly liquid due to standardized sizes and maturity dates. This standardization ensures easy trading and ample market participants. What are price limits in futures? Indian futures trading has daily price limits, which restrict how much a contract's price can move in a single trading session. It helps manage volatility. How does margin work in futures? Margin requirements in India are set by exchanges and are typically a percentage of the contract's value. It's an initial deposit to cover potential losses. What's the settlement method for futures? Cash settlement is common in India. Physical delivery is rare for most futures contracts, making it more accessible to traders. Who are speculators in futures? Speculators aim to profit from price movements without intending to take physical delivery of the asset. They play a vital role in liquidity. How are futures used for hedging? Businesses use futures contracts to hedge against adverse price movements in commodities or currencies, reducing risk. What are mini contracts? Mini contracts, like mini Nifty futures, offer reduced contract sizes and lower margin requirements, making them accessible for retail traders. What are single stock futures, SSF? Single stock futures allow traders to speculate on individual stocks' price movements. It's a way to diversify and focus on specific companies in the Indian market. How is speculative trading regulated? Speculative trading in futures is regulated by the Securities and Exchange Board of India, SEBI, to ensure market integrity and protect investors. What's the role of mini contracts? Mini contracts are available for popular futures like mini Nifty futures. They have reduced contract sizes, making them more manageable for retail traders with smaller capital. Do options exist on futures contracts? Yes, options on futures contracts exist. They provide traders with additional strategies to manage risk and speculate on the future price movements of the underlying asset. What's the expiry cycle for stock index futures? The expiry cycle for stock index futures in India includes near month, next month, and far month contracts, giving traders flexibility in choosing their preferred contract durations. How has online trading impacted futures trading? With easy access through online trading platforms, futures trading has become increasingly popular among retail investors in India, allowing them to participate actively in the market. What is arbitrage in futures trading? Arbitrageurs often take advantage of price discrepancies between the cash market and futures market to make risk-free profits. It's a strategy that leverages price differences for gain. What are weekly and monthly options contracts? The introduction of weekly and monthly options contracts on stock indices has added flexibility to trading strategies, enabling traders to choose shorter or longer time frames based on their preferences. What role do circuit limits play? Stock futures and index futures are subject to stock market circuit limits, which can halt trading during extreme price movements. It's a safety mechanism designed to prevent market crashes. What happens on the last trading day of stock index futures? The expiry of stock index futures often leads to higher trading volumes and volatility on the last trading day as traders rush to close out their positions or roll them over to the next contract. It's important for novice traders in futures and options to thoroughly understand these terms and facts and